how the company is doing. Okay. So currently, if you look at the Vector Food, the market cap is about 8,537 crores. So it is, like a small cap company. Okay. And the stock P is 61. So currently it is trading at 61 as against the issue time when it was trading at 91 or 90 something. Okay. So since the company had a great future, so it has made good profits in future. Let's look at, for example, the profit loss of the company. Okay. So it got listed somewhere, around this time, 2020, when the turnover was 762 crores. And today we see the turnover has gone up to 1,907. So almost like double, triple kind of a turnover. Okay. And the profit, the operating margin is close to about 13 to 14%. And the net profits and the earning per share, which was, about 3 rupees somewhere here, okay, in one of the quarter. So, which was finally reported as close to about 5 rupees. And then today it is trading at a P of EPS of 22 rupees 58 paisa. Okay. And it has given a return or CAGR of about in 3 years time 55%. The last year it has corrected a lot. Okay. So if you look at the last year, because if you see the last year, last 3 years have been very flattish in terms of EPS. So EPS has not done, rather it has gone down from 2386 to 23 to 22,858. So let's go to and see the charts. Okay. So if you look at the 1 year chart, we'll find the price have gone down a bit. Okay. Fine. So let me just, take off this. So this is the price in the last 1 year. So price has been coming down, almost like from say 1800 level. So price was close to about 2000 here, and now it is trading at around 1390. So price has corrected a lot, almost like 2000. It has come to 1390. Of course, it is much more than the issue price, but the price has gone up to 1390 now. Now, if you look at, most of the companies which are into this, this thing, we'll find there has been a very low consumer demand in India in the last couple of quarters. Okay. So India's, growth has been slowing a bit, particularly in the last 2 or 3 quarters, particularly the profit growth of the companies, So if you look at, the peers, for example, okay. Now we look at the peers, all the other companies which are there in the same thing. Nestle is trading today at 78p, okay, and Britannia is trading at 68, and Bikaji Food is trading at 96. Now, of course, with the GST coming in now, and the rate of GST is now going to be almost like 5% or nil rates on most of their products. So this might have given a lot of this thing flip to these companies. So Vector Food is trading at around 61. So the median is about 66. Okay. Now tell me from this chart, is Vector Foods still expensive compared to its peers? What's your observation?
So when comparing with peers, we take the median as
Yeah, yeah.
the anchor for comparison. So
Yeah,
for
it is
that, it is
cheaper,
cheaper.
definitely, but it is cheaper as long as, though it is cheaper, we say it's not very expensive, but how can we say it's not very expensive? Now, if you look at the last 3, years data with regard to earning per share, we have seen that the earning per share is showing a declining trend. Okay, fine. So, which means that the profit growth is not coming, the EPS is not growing, but still it is somewhere in the, a lot this thing. Of course, compared to the median, it is far less, 61, but still commanding a high value. Okay, fine. And Nestle, which is trading at 78. Let's look at Nestle, Let's look at Nestle, how it has done. Let's look at, Nestle, how it has done in terms of their sales and, this thing. So Nestle is, it's a big company. We all know. So if you look at Nestle, its, market cap is 2,34,000. It's a large cap. Okay. And if you look at the ROE, 83%. So the ROE looks very good. And let's look at, the profitability. the now, if you look at the sales, if you look at the sales of the last year and 2024. So what do you witness? What are you seeing? The sales, how the sales are reacting? It's coming down or it's going up? So what's the notice here? In the last coming down,
So it's
it was,
coming
of course,
down.
in 23 it was 19,000, then it went to 24,000, and then March 25 it has come down to 20,000. Okay, and the TTM number is also not reflecting that there's a big change. Okay, so as I told you, there is a lot of happening. The most of the companies not reporting huge profits. The earning growth is not there, so that's why the markets are not doing well currently, and it has remained at 25,000 level for quite a lot of time. It is still languishing below its peak. Okay, the earning per share, if you look at, so what does the earning per share story tells you about this company? Is it growing or it's going down? It is
So
going
it
down. So,
went down
you
in
can see this is
1 year.
the same pattern for all the companies, okay, in this, this thing. So Nestle also is showing a kind of a decline. Now, with the new GST, coming in, how it is going to impact Nestle and other companies. Some of the products were, being offered at 18% GST. Now it will come to 5%. So, now if you look at Nestle and just look at the price chart, how it reacted to the recent announcement of the GST. So after GST being announced, so look at a 1 month chart, for example. So it has shown a kind of an increase, okay, fine, or let's say 6 month chart. So after the announcement of the new GST, the share prices have gone up, okay. And look at for example again Mrs Bector also. So look at its chart in the last 6 months. So in the last 6 months, there was a slight bump and then again it fell down. So there's something wrong with Bector, it seems. Despite the GST kind of a flip which has been given, it has reacted positively for a very short point of time, but then it couldn't hold that gains. It couldn't hold the gains. And let's say if we suppose we make a 50-day a DMA, add to it. So it is currently where it is. So it is trading, below its 50-day moving average. So that means the short-term trend is also down. Okay, and whether let's look at the long-term trend. The long-term, now both the share prices is below the long-term as well as short-term. Okay, so that means the share seems to be not doing very well in terms of the technicals also. It is trading below its both short-term as well as long-term averages, and somewhere this the cross happened here. If you look at the chart here, so the short-term averages came down below the 200 moving average. So this is the reverse chart pattern which shows that the bearish phase has begun. So after that, after this crossover happened, the share prices started going down and then some pickup. Okay, but and the share price went up compared to the both the averages, but it couldn't hold for long, and now again the share price has gone down below its moving averages. So the trend is not very good. So let's talk about the other, this thing, Britannia Industries. Okay. So Britannia Industries trading at 68. Okay. So let's see Britannia Industries. So Britannia Industries, and look at the profit loss account. So now look at the this thing. Tell me, how is the trend of Britannia in terms of, top line? Is it growing? It is growing. So there's some
Yes,
exception
sir.
there. Let's look at the earning per share. It has grown over the last
It
2 years.
also
Of course,
grew
it
in
was
1 year.
63 to 96 in 1 year, and then it came down, and then it started picking up again. Okay, so the Britannia is doing fairly better. Okay, and look at the charts, for example, and let's look at the chart. Charts also are showing a very good story. Okay, if you look at the chart, it has shown after the announcement of the GST cuts, so it has moved up, not even come down once. Even after that. So if you look at the technical story, then the 50-day, it is above the 50-day, so which is bullish in short term, and the long term story also looks to be very good. And here the golden crossover happened somewhere here, and the share prices started happening going up thereafter. Now, if you just look at this chart, okay. Now tell me, there is a 50-day moving average, there is a 200-day moving average, and the price. So can you notice a golden crossover happening? Can you notice that here? This is called the golden crossover. Where before that the share price was, not doing so well. In this period, share price has fallen. Okay. So this was a brief period of lull from December to April. So almost like 4 to 5 months, it was not doing anything. And then the crossover happened and the share prices started moving up. Can you notice that? Shristi, Mananya, anyone? You can notice that,
Yes,
there was
sir.
a crossover happen. And whenever the 50-day moving averages crosses above the 200-day moving average, it is called the golden crossover, which tells you that the company is going to do very well in future. So this is a long-term kind of a trend, which was achieved by the company. And again, if there was after the Trump announcement of 50% tariff, where this news had taken the share price below the 50 and 200-day moving average, but then it bounced back after the announcement of GST reforms, and then because it acted as a support, the 200-day moving average, which is the green line. So almost provided a support at that time. It fell down little bit below the 200-day, but then recovered after the GST came in. Okay, kicked in. Now look at here. Look at this golden crossover. Tell me one thing: is the share prices started moving up after the golden crossover happened, or well before the golden crossover happened? I'm asking you this.
Well before.
I couldn't get it. Well
Well
before, yeah.
before.
So, what does it say? What does it signify? That 50-day moving average crossing over 200-day moving average, though it is called the golden crossover, but it's a lag indicator. It tells the investors after 1, 2, 3, 4, 5 weeks, sometimes, or maybe 3 weeks, that the price trend has changed. So the price trend has changed, but the crossover happened, much, earlier, after the price has started moving up. So the moving averages are nothing but lag indicators. They don't predict the share prices trends, but they tell you only once they only confirm the price trends. Okay, so they only confirm, they don't predict. So there is no tool which can predict the price movements. Okay. So if somebody says that he can predict the share prices, then of course there is no tool in the world which can predict the price movements. But these price, averages or technical indicators, they can only tell once the move has happened. Okay. So it's a lag indicator. Now it is called the moving averages. Now there are various advanced moving averages. Sorry, there are advanced indicators which tells you much earlier. So there is one indicator which is called MACD, so which is a moving average, advanced version of the moving average, which will, somewhere here, it will tell you the move has begun. Instead of telling here, it will tell you about 2 weeks before. Okay. So there are some indicators, though they are also lag indicators, but they will tell you, almost they will coincide, or they will tell you after a few days, 1 or 2 days, that the stock is going to go up. Now, if you want to take a position, now suppose if you are a long-term investor, so you will now, after this long-term the crossover, you're going to invest because you know that the share price is going to go up and you're going to make a big money. Okay, fine. Suppose if you are a long-term investor and you wanted to invest in some shares, so you will find out, where what all shares where the 200-day moving average has, 50-day moving average has crossed over the 200-day moving average. So you just screen all those companies, okay, and then choose which companies I'm going to buy if you rely on the technical indicators, and they are highly reliable. But then this moving average, which is telling you about the golden crossover, is actually giving you the information much later. after the move has already begun. So the better option would be called MACD. Okay, so I'm just going to just say MACD. I'm just going to put this, you know, MAC. It's an advanced version of the moving averages. So we are not going to do that. Okay, so just read this, Srishti.
The MACD indicator or oscillator is one of the best indicators for identifying trends and reversals in the financial markets. The MACD strategy in its most basic form involves using the crossing of the smooth out signal line over the MACD line as you enter
Okay,
into your exit
so
point for the trade.
fine. So if you look at some of the charts here, so this is the MACD indicator chart. So anyway, we are not doing that. So he's just moving out at the moment. Maybe if time permits, I'll talk about little later about this thing. So a MACD indicator is a much better, technical chart, which will tell you, much in advance about how the share price is going to behave, whether it's going to go down or go up. Okay, it gives you an advance intimation of that. And if you are an investor, either a long-term investor or a short-term investor, so you can rely on these, for taking both long-term as well as short-term positions. Okay, so we come back to our main this thing, and then we'll have a, because we are going to end up somewhere. So it is about 12:30. The time is this thing. So just few more minutes, and we may have about 5 minutes break. Okay. So we have, like Bikaji Foods also. So one more company, Bikaji Foods. So what is the PE ratio? Okay. So which is the company which is having the
96.26.
highest PE ratio in this pack? So, just
Gopal Snacks.
we have to look at both these companies, how they are doing. Why this Gopal Snacks is having, very high PE ratio. Okay, so let's go to the Gopal Snacks. Okay, the company is a very small company with 4,648 market cap. So it's a, tiny, cap. Look at the profit loss account of the company. So look at the top line. So what it's suggesting, is it going up, going down? Going up. Of course, the
Going up.
TTM number is not showing a very good sign. Okay, but the it's going up steadily from 23 to 24 to 25. And look at, maybe, it is going to get the maximum benefit from the current GST. So look at the earning per share of the company. Okay, earning per share was what? Some 389, some absurd numbers, and then 9, 7, and 1. So the EPS is not giving up a very clear sign. So let's see the so again, the share price is moving up after the announcement of the GST. Okay, but it looks that the company is quite overpriced because the company is not doing very well in terms of the levels of earning per share, and it's today being overvalued. So we can say Gopal Snacks, having a very cursory look, we can say that the company is quite heavily overpriced, okay, in the pack. Let's say Bikaji. Now, Bikaji is again a small company, but bigger than Gopal, this thing. And let's look at the profit loss account. So what does this story tell you? Is the company growing? Our company is growing, yeah,
Yes, sir.
definitely doing very well. Let's look at the earning per share also. So it's grown from 3 rupees to 5 rupees, 5 rupees to 10 rupees. We're doing very well. Then tapered off in the last year. It fell down by about 20%. Okay. So there was a kind of some consumption pressure in India. The consumption had come down. So if you look at, the consumptions have come down a bit. That's why, the government came up with this GST plan and the income tax plan. So because, the government wanted to give a lot of money to the public in form of, the income tax reduction in the new regime and the GST, because they wanted that the country was not doing very well in terms of, the companies are not doing very well in terms of profits. So if you look at the profit of the company, it had gone down from 263 crores to 180, 194. And one more company, before we just have a break, is called Devyani International. Okay. So Devyani International, have you heard of this company's name? So this is basically the KFC and Pizza Hut,
Yes, sir.
company. Basically, they are having the rights distributor of Pizza Hut and this thing. So look at because I have got one of the shop which I've given to Pizza Hut. So look at the Pizza Hut, or maybe I'll call it Devyani. So what do you find with Devyani? Is it the sales going up? The top line? How do you find the top line
Yes,
of
sir.
Devyani?
So the top line would be
Huh?
the sales. So it's going up. The top line
Yeah,
would be
it
the
is going up.
sales,
So it is,
so it's
like
going up.
3,000 to 4,000, because, I always keep a tab on this company because, I get a good amount of rent from the shop which I've given, and it all depends upon the turnover. So they give me some percentage of, turnover as a rental to me. So I'm always interested to know how this company is doing, and look at, the earning per share of the company. The earning per the share company is not doing so well. The company has been doing in terms of top line, but the company has been in losses over the last 2 years. It made a profit of 263 crores, and probably the loss has come from where? The operating profits have come down. The margins have been eroded from 23 to 16%. So almost there's a 4% decline in the margins, they make on their pizzas and KFC's chains and other things. So they are offering a lot of discount because there's a lot of competition which is happening, in currently, because there's a drop in the consumer demand everywhere. So they are selling their, pizzas and KFCs and other products at much cheaper price. Okay. And look at the interest burden has also gone up. So they've taken, a lot of money on loan. If you look at, for example, Devyani, so they have a debt equity ratio of 2.91. So which means they have taken a lot of, debt in the recent past. Look at the debt. So it's now 3,000 crores, 2,000, 1,500. So they've doubled their debt in the last 2 years. So because of that, the company's become riskier. Okay. And it's not showing a very good sign. And the share prices, have almost in a range bound situation here. Okay. So now, we will just break for about 10 minutes, and then we'll just again come back and take the attendance and have the final and talk about the group project. We'll discuss about the project which we are doing